let's head over to Canadian housing crisis. Canadian housing crisis. Whoa, boy. It's just like Australia and New Zealand. Don't. It's all money laundering, boys and girls. It's all money laundering. And it's destroyed, absolutely destroyed the Canadian middle class. Okay, here we go, folks. Ontario unemployment hits recession levels driven by excess labor. And we are done. Canada's finished. Canadian unemployment is rising, and the country's largest province is leading the trend. Ontario's unemployment rate climbed 7.9%. They're telling you 7.9%. They're telling you 7.9% here. It's actually 14 or 16 in May, nearly a full point above the national average. A new report from BMO warns the province's unemployment rate is now at a level not seen outside of the worst recessions. The problem is set to worsen as job creation already failing to keep up with the pace of labor force growth slows even further. So unemployment rate is surging in Ontario. There it is there. We are going to go back to pre-2020 levels. You know, that's why they had to pull the trigger on the pandemic, right? And Ontario isn't losing jobs. It's attracting excess workers. As explained last week, Canada's rising unemployment is due to its aggressive population growth, not job losses. Canada's adding workers faster it could create jobs. Since Ontario is the biggest recipient of immigration inflows, it's no surprise that this problem is amplified in the province. And Ontario's job market is moving from oversupply to lack of demand. So Ontario's problems may get a lot worse in the coming months. The bank notes that the job growth has lagged behind the population growth, but it has at least remained steady. So watch what happens here, folks, as unemployment hits recession levels in Canada and Canadian households back to racking up debt faster than income. Oh, yeah. Canadian households. Yep. And they're racking up debt faster than income, and Canadian households once again are piling on debt faster than their incomes can keep up. Right? Why? Well, here, let's go real quick here. If you want to know why or get more information, we made videos about 10 years ago. Housing ATM machine, massive defaults ahead. People are taking on too much debt. That was a video we made 6 years ago. Canadian household debt is growing, using homes as ATM machines, using debt to buy food. And from 11 months ago, homes are the new ATM machines, people borrowing too much. So if you want more rate hike destruction as Canadians borrowed another billion against their homes, ATM machine homes 7 years, 9 months ago. So if you guys want more information on what we've been telling you, you can go back and check that out. How we were warning people for a long time now. Canadian households, again, once piling on debt faster than their incomes. And household debt to income ratio rose in Q1 2025, eroding some of the progress made in previous quarters. While rate cuts initially offered relief, they've begun to backfire, fueling borrowing and increasing household vulnerability and economic shocks. In today's data here, says the ratio below 100% is considered ideal, providing a strong protection against economic shocks. Between 100 and 150% is elevated risk, but generally manageable. Above 150% is high risk. The households effectively are treading water. So here we go right here. It's getting to the 173 Q1 area. And then again, when they had to pull the trigger on the pandemic right there, it was at 181. So you could see what's happening here, how they have manipulated the markets and had to pull the trigger on a pandemic. And that's something we've been warning you guys about since 2017. Low rates provided temporary relief, but make the issue worse. Again, when they raise interest rates to hedge against inflation, guess what's going to happen, folks? You won't be able to afford to buy food. And that's just a little replay of what we've been saying on here. Once they raise rates, you can't buy food because all your money is tied into real estate. Competing with money laundering. Competing with Chinese money launderers. Woo! Yeah. So someone keeps telling me, you can't be blaming the Chinese. Blame your governments. Our governments are China. Right? Everyone's at fault here. Right? The Canadian proper is at fault for allowing this to happen. Right? So there it is. The people needed to park their money, and Toronto mortgage delinquencies hit 9-year high. So we're going to see more and more mortgage delinquencies. Mortgage delinquencies in Toronto have surged to their highest level in 9 years, signaling distress in the city's housing market. Better Dwelling reports. The findings have implications for the condominium markets, which largely depended on first-time home buyers who have difficulty securing mortgages, right? So they were getting first-time home buyer loans. Remember that, folks? Back in 2017, the Trudeau government was like, first-time home buyer loans going to help Canadians get into the housing market, already competing with Chinese money laundering. Now they're going to raise rates. And now you're going to lose everything because you competed with criminals. You took the Canadian government criminal money, which you have to pay back, and then you have to compete with criminal Chinese money laundering that's created artificial shortages in your country and made you think property is going to keep going up. Properties are going to keep going up. I went on talk shows, real estate talk shows, talking with other channels, and I kept telling them, well, they're going to have to raise rates. Our economy is built off of fentanyl and money laundering and all. They thought I was retarded. Well, I'm probably retarded, but they thought I was like laughing at me in the show, in the live stream. They're making fun of me. Now it happened. I want to collect my 50 cents from everybody. That's what my 50 cents from everybody. Now it's happened. Yeah. Trends, stark contrast national average with Toronto experiencing a steeper climb than the rest of Canada. The latest data highlights the challenges faced in the city's real estate sector. So what happens? Well, if you're a first-time home buyer, you don't buy a home. You buy a condo in the sky, right? In Toronto or Vancouver, where we are, at 500,000, 600,000, 700,000 to start. At 0% interest, you could afford that. But once they start raising interest rates to hedge against inflation, you're not going to buy food, right? Okay, we got people in the comments here live. I'll get to you guys in 1 second. Just want to polish off these headlines for Canada here first. And Vancouver is the worst major Canadian city for housing affordability. Old news, we knew this. The Chinese came in and they dumped, I don't know if it's like $777 billion just in the Vancouver area. The medium income Vancouver is barely a third of what is required to buy an average home in Vancouver. Far, far away, worst affordability differential among Canada's big cities. So, I mean, we talked about this, but let's get into see if we could even open this image, because this image looks, let's almost open this image here. This image looks good. There we go, folks. So the benchmark, I guess, Canada, 315,000 for a home to 757,000 for a home. So you got your benchmark price. Guys, this is years old, eh? I brought this up because it's years old, but I wanted to bring up, this is 2023. We're in 2025, right? So the Vancouver average home costs $411,000. That low, and the $1.2 million high. So $1.2 million is basically what you could buy in Alabama for 40 grand. And I got a little treat here for people in Canada. Edmonton, 370 roughly, benchmark. That was 2023, folks. Calgary, 385, 550. 385 low, 550 high. Saskatoon, 338, and then 376,000. Winnipeg, 307,000, a high of 346,000. Hamilton, Ontario, all right, 350,000 low, 880,000 high. Toronto, 445,000 to $1.16 million. In Ottawa, 370,000 to 652,000. Montreal, 278,000 to 523,000. Halifax, 295 to 540. So the lower numbers you're seeing here, guys, are just apartments, right? And that was in 2023. Now it's gotten so out of reach that it's out of control. And what did we tell you? What if you want more information on that, you're welcome to check out our video here. Money laundering via CCP is destroying Vancouver. Quiet streets. Canadian families can compete. 8 years, 10 months ago. CCP money laundering is forcing youth out of Vancouver and destroying the interior towns of Kelowna, BC. 7 years ago. Chinese money laundering destroying Richmond, BC. Richmond, BC becoming abandoned. Chinese unloading big assets. Vancouver is dying. CCP fentanyl is killing our youth. Very serious issue. So the fentanyl was being redistributed into our real estate market. The profits from Chinese gang. Vancouver mass exodus. Young families leaving. Can't compete with CCP money laundering. Crazy Canadian housing finally corrected. Interest rate hikes correcting the Vancouver housing. That was 7 years ago when they were raising time. It's about time. They were raising rates. And then they dropped it and they dropped it. And then they pulled the trigger on the pandemic. And then we're back here again. Get out of Vancouver by 2020. Housing is ruined. CCP has taken over Canada. Chinada 8 years ago. Vancouver's cheapest home sold for $492,000 profit. 490. So long, middle class Canada. CCP takeover hard at work 8 years ago. Guys, don't forget to check out. Look, half of Greater Vancouver can't afford a one-bedroom rental 5 years ago. And they're bringing in all these migrants to take us over and to take over this country. And it's really, really sad what is happening. I do have a little bit of something to help you guys with in Canada. I want to go into a little bit of Canada stuff here to help you guys in Canada. Because I just want people to see. And we've been warning about, showing you guys the difference. Here it is. Look over my head. Look over my head here, guys. Look at the price of housing there. Look at this, $60,000, $75,000. A house like this in Canada, for example, like a house like this, like in my town, is about maybe $550,000 for a house like this. And that's $95,000 American. Oh, but that's American. Oh, okay, so that's 132,000 Canadian. Ooh. Oh, but America, you don't have free healthcare. We don't have free healthcare here in Canada, guys. If you guys are out to lunch, we don't have free healthcare here. It's socialized medicine here. It's not free. And but it's so dangerous here. Anyone walks into my place unannounced or breaks into my house, or someone comes in to do damage to me and my family, I could just blow them away with my gun. And it's being urged by police and sheriffs in Florida. And you could buy, look at this off-gridder here. 99 grand. This in Canada, in this condition, oh my God, you're looking, depending if you're in Vancouver, a house with this much land, you're probably looking at $2-3 million for a house like this. In this condition. And you could get one there. Look, it's pretty much up. All you got to go, it's got some drywall work done to it. Look at that. Okay, it's got some bathroom work done to it. So I mean, you could just kind of move in and work on it. And you got land, you got a shed, you got, I make this into a nice parking area, get rid of the grass, right? So in Canada, let me know in the comments below, if you're watching this on replay, how much would this cost in the Canadian city? Because if this in the Canadian city, I mean, Vancouver, Toronto, in the Toronto area, you're looking at a lot of money, right? So, or even rural Canada, where I live, even rural Canada, you're looking at about 4 or 5, maybe 600,000 with that much land, right? So there it is, folks. I love bringing this little treat on for people living in Canada when they keep saying, "Oh, America this, America that." Well, you know what? Florida's real estate's not tied to Chinese money laundering because they banned it back in 2017. We covered that on Trends in the Housing Market. So there you go, Canada, for you guys to enjoy. A nice snack. This is what some people pay for hors d'oeuvres as a side order in a restaurant. What you could buy there. Yeah. Nice snack. Canada needs to bring its money laundering under control and start calling out the money laundering. If people keep saying, "Oh, you've got to blame your government for this money laundering from China, not the Chinese," okay, then bring in a government that's going to go against the Chinese money laundering, that's going to protect the Canadian interests, and then you go ahead and blame, and then the Chinese that laundered money in Canada could blame the government for it. Because you could blame the government for bringing it in, and you could blame the government that comes in that stops it. That's, don't know what more I could say about this.